Good morning, guys. Welcome to this Wednesday, August 19th, halfway through the week. Market is just, we had a couple of days of selling now. So far, the overnight took a little bit lower. That kind of just holding on to where we left it, for maybe a little bit lower, but then where we left it yesterday. But man, it's could really, yes, it could keep going. So we'll see how the day is going to shake out. The news this morning is pretty anemic. The mortgage apps come in like mixed, nothing big, not a big reaction there. We have 10 o'clock. We get Atlanta Fed business inflation expectations. We have an oil report at 10:30, a Treasury buyback announcement at 11, 20-year auction at 1, and Fed minutes at 2. Nothing of that's really good. And maybe the Fed minutes, you can see some reactions to watch out at 2 o'clock. But I don't think any of that's going to really create a big reaction in the market. So the question is just, are we going to see continued weakness, or are we going to see them trying to make a stand here and hold the line? That's going to be the question for today. Other than that, we're in summertime trading, and expect volatility, expect whippy stuff going on. Yesterday was pretty darn whippy, I have to say, but it's overall. Big question for today is really, as are we going to see a continuation on the downside? I started the overnight with a bias to the downside. You can see they have taken it a little bit lower in the overnight right from the get-go, and then they backed off a little bit on the ES. So they're starting to retrace these single prints. Question is how far they're going to go. They can technically go all the way down here to the 7630, but too much trouble. So I'm going to start off again from the short side. I'm going to watch these resistance areas. If it starts trading above that 77.45s, at that point I'll change my bias and start thinking maybe retracement trade is in order. But it's as you can see at that lower end, 77.24 is pretty much where this guy stalled. I mean, I'm going to give it a little bit more room than the 24. So the first level here, the London high right now is right there, reverse retesting that prior distribution's low. So I'm going to look for short setups against there, against the 35s, against the 45s for rotations down. Now, when I say early strength, as I said yesterday, I mean early strength right from the get-go. If they start running it lower and then fail and start trading higher, that's not quite the same. So it's you want to look for that early strength right from the get-go. Just try to take it higher. Look for short setups against that 25s, 35s, and 45s for rotations down. And if they start heading lower to get started, again for buying opportunities against 77.10 and 7700s with a bit of caution. Not going to be super aggressive on those two since we're leaning towards the short side, but they could hold. And if either of them holds, they could be setting up a nice long retest failure trade for rotations back up again. If they take out the 7700s, just stay on the short side, look for a continuation to all the way down here to the 7630s. And that's going to be all the way down here. So we've got a couple of levels, I guess, here at 7670, 7660, 7640 here. But I mean, if they look at those with a bit of caution when you start getting there, maybe if they get down there, look for buying opportunities. But they start taking out these lows at 7700s, just stay on the short side and see how far they want to drive this. So we'll see how much weakness we're going to get. Right now, they're backing off this high. They're probing in these single prints. And you never know. We can still have an elevated down day ahead of us where they run it right back down here into this lower range, right back into the starting point. It could very well happen. It's not by any means impossible. If they can hold the line, though, they could set up a nice potential leg higher. I mean, the earnings has been nothing but spectacular this earnings season. So there's precedent for it. For this, there is I should say a reason they can trade this back up again. Earnings are great. Companies are making money. They're growing their earnings double digits. Now, the fact that the market is so wimpy and has such a hard time trading higher due to this AI trade and all the volatility which comes with it, that's just, I guess, the market. Time of year, and the market is this time of year, it's usually pretty uh, a lot of volatility during the summer months and into the August September timeframe. But I mean, it's we had a pretty good sell off here in late July, so I'm still waiting for them to maybe get a little bit more mojo than they have. So, but they retraced it pretty good beginning of August, and then back up making new highs on the ES. So we are definitely. I mean, you get all this slop and all this hesitation, and suddenly you get this big run, and it happens. The hard part is it happens 2 days. Or if you're not in the market in those 2 days, you missed out on the whole thing. And then you can sit and just sit there and then go sideways and slop around and hesitate and then you get a big move again. So yes, yeah, you have to stay invested. Trying to trade those moves is very difficult. But anyway, so we're starting with a bias to the downside. Let's see how far they can take it. Early weakness up to that 45 level. Rotations down. Looking to buy against the 7710s and 7700s to get started with a bit of caution. And if they keep going, stay on the short side. If support holds, could set up a nice long trade for a rotation back up in that prior distribution. On the NASDAQ, we are back here. We are not quite down here at the lower end yet. It looks like they're going to try to do it. Take it all the way down here to that lower support area. So I would stay on the short side on the NASDAQ for sure. This morning I was watching, chip stocks and the AI stocks are all to the downside still. And it's kind of funny how that whole trade comes together. Quantum stocks, AI stocks, hyperscalers, all that stuff gets sold all at the same time. It's like everything gets sold. And sometimes you get some of the software companies like ServiceNow and Palantir kind of countering that, but it's pretty darn red here on the chart. So starting off in the short term on the Nasdaq, I would look to sell strength up to again right now the 570s would be aggressive, but the 630s, 680s up to the 770s here for rotations down. If this starts trading above that 770s, I would be starting looking for a retracement trade to the upside. 770s would be up here against the attractor area we had on the way down here. So that's what that move started from. They ran down there and blew through that. But that would be, if they start trading above that, I would look for more of a retracement trade to the upside. So looking for short setups early on against the 630s, the 680s, and the 770s. Maybe this 580s here, 570s here but we are trading pretty darn close to it. And then looking to buy against the 510s and the 430s for rotations back up again. And let's see, 510s, 430, yeah, 510s, 430s for rotations back up. A bit of caution since we have a bias to the downside. And if they take out that 430s, just stay on the short side and wait for them to run down here and test this 260 to 70 area. That's probably the level they're trying to go to. But how crazy that is, right? They're up here against resistance, up in the upper levels, and they're going to be all the way down here in no time at all. So that would be a 30,200 down to the 29,000, like 1,000 point move to the downside. Pretty crazy. Nasdaq is just absolutely nuts. So that's the Nasdaq to get started. Very similar as the ES, but a lot more range on it. And looking at the bonds. And they're trading higher, but not enough for me to start thinking that there's a reversal going on by any means. They pretty much just trading. They were down here now, all the way down to the 107.24. Now trading back up towards the attractor at 109. I'm probably going to reverse retest this area. They're going to have to take out this area up here, the 110s, for me to even start thinking that there may be a retracement going on. But you see how the building value here, they take it a little bit lower, retrace, take it a little bit lower, retrace. They're just grinding it down. And I'm thinking lower prices. I'm still thinking lower prices, high yields. The 30-year yield is like at 5.3% or something like that. That's pretty darn good. And I think one of the big concerns there, actually, I heard that and they talked about it on the news yesterday, that about 5%, 5.3% on a 30-year, it's going to be pretty attractive for some people to just sell their stocks and put it in bonds instead. I mean, at 5% guaranteed for 30 years, that's not a bad investment, not a lot, but it's not 2%. So when you start getting up in those percentages, pretty much risk-free money for 30 years, instead of sitting through these freaking AI rotations back and forth, that could be attractive to some people. I just kind of throw in the towel, say, I'm just going to stick my money in the bonds, 5%, great, and then go sit on the beach and have a cocktail, right? Anyway, so that's I'm showing you the crypto, sorry about that. Script over to cryptos. With the bond market here, you have the ES. So here you have the bonds. So they're trading higher here. They're up here against that. So let me show you that again. So they're basically looking at this guy right here, this reverse retest up here. So 109, if they start trading above that 110 level up here, and they start trading above that, that's when I start thinking maybe we have a shot at retracing. But I think there has to be some fundamental change in direction somewhere before that happens. I don't think the bond market is going to be trading up unless we get some significant change in dynamics. And we've got a few things going on here, so. All right, so I would start off the bond market, slight bias to the upside, see if they can retrace a little bit higher. But I would look for shorts against the 109.8s, the 109.15, 16s, 109.20s. I look to buy against weakness, 108.22s, 108.16s. Not more than that. They start trading below that 108, 16 to 18. I'm back on the short side. See how far they can take it to the downside again at that point. It looks like a little bit of strength in the overnight. Let's see if they can hold on to that or if that's going to be going sideways. So one market haven't been super aggressive trading that. They're waiting for setups on that thing. When it happens, it happens. It's a good setup. Otherwise, it's one of those markets that's trading in slow motion. And then finally back to the cryptos, the one I was showing you for a bit. Silver's back up 63. Gold is trading at 44. Oil trading at 85. This is the last day on that expiration. I'm going to roll that expiration here after the close today on oil. So I'm not trading that one today. But looking at Bitcoin and Ethereum futures, a bit more careful. They've been trading a little bit to the upside. So maybe we get a bit of hope on that thing's going to start doing something. I'm hoping that the Clarity Act is going to be get itself sorted out so we can these guys can start moving forward. I think it's a big deal for them. So right now, I've done crypto's just in the doldrums. Just trade it as a scalp that market the best you can. So so not much else to say about that on the crypto side of things right now. I see something interesting happening, but you can see how it's pretty wild, whippy, going back and forth on those markets. You just had to trade in with a bit of caution. Back to the ES and the Nasdaq, and so we're starting off on the short side on those. At least to get started on the ES, watch that 77.45. Above that one, we'll shift bias. Below the 77.10s, or sorry, 7700s, we're staying on the short side. On the Nasdaq, that level is going to be a little bit higher. We're going to look at above that 29.770s is where we start thinking a change in bias on the Nasdaq. So we'll leave it there. Alrighty, guys. Good trading. I'll see you back at 11:30 for the next update. Later.